Hi, I'm Asif Farouk of Finextra and we're here at level 39 with Ruth Brown of Mambu. Ruth, thank you for joining us. Now, there seems to be a particular emphasis on banks trying to engage with the underbanked and unbanked market. But what do you think banks are actually doing wrong in engaging with those markets?
Okay, yeah, I think it's really a really interesting space actually. It's not really the fact that banks are doing something particularly wrong. It's more the fact that banks, particularly in the sort of more developed markets, were not really built for the purpose of serving the underbanked. Essentially, with the retail banking model as it is today, it's much more focused on comparatively higher value accounts with higher savings balances, a lower number of transactions, and quite sort of rigid product structure, really. When you look at the underbanked and unbanked market, you're talking about comparatively much higher volumes of accounts and much smaller financial amounts, so much smaller transaction sizes. What that means is the distribution structure, the technology behind the structure are quite different, the requirements are different, and essentially in the past it hasn't been cost effective or even feasible really for banks to access those markets in a cost effective way.
So can you give us some idea of numbers in the unbanked and underbanked market, perhaps the value of wealth there?
So the numbers are actually quite staggering. According to McKinsey, approximately half the world's adult population are still either unbanked or underbanked. We're talking about 2.5 to 3 billion people. Alongside that, we've also got something like 250 million micro and small businesses who are also not being served. And we know from the experience in developing markets that when small businesses can't access finance, that can have a really crushing impact on economic growth overall. So in terms of the numbers here and why it's an interesting space for banks to look at, the opportunity there is really in serving those micro and SME businesses. Again, according to McKinsey, they believe that something like 60% of global banking revenue will come from emerging markets over the next 10 years, and that by 2015, $367 billion of revenue will come from the micro and SME market alone.
And can you give us an example on the kinds of strategies that you could use to actually engage with those markets?
So I think that the first thing to think about is that in the unbanked and underbanked sectors, they are, like any other customer segment, unique in the kinds of requirements that they have. Typically with this customer segment, they don't have any banking history, so it's all about how can you operate in an environment where you don't have a credit bureau. For many of these individuals, they literally have not had a bank account before, so it's how can you assess their credit risk, how can you ensure that they understand the process involved. Financial literacy is a big issue as well in some of these markets, and obviously lots of NGOs and other organisations are doing great work in terms of trying to help improve financial literacy. In terms of actually engaging at a product level, I think the challenge is really about finding new technologies and finding more cost-effective ways of getting to market. It's not about building a branch network in a remote part of Africa or wherever it might be. It's about understanding that there are new technologies now using mobile, using cloud computing, for example, where you can actually gain access to a customer much more quickly, much more cost-effectively, and offer services that previously might have only been available in more developed markets.
And what about the underbanked first world? Is that a market we should be focusing on?
So there's definitely an opportunity. There are definitely significant underbanked and underserved populations in Western markets. I think the examples like Wonga show how much demand there is for those kinds of services. The opportunity really for banks is to figure out how they can provide services that compete in that way. In the same way that banks aren't really set up currently to handle a microfinance type of product set. In the same way, they're not really currently set up with their current distribution models, their technology. Really product flexibility is a key factor here, and they just don't have the ability with their current infrastructure to be able to operate in a nimble and dynamic way. So the opportunity really for banks is to look at perhaps setting up separate divisions, maybe as spin-offs of their current brands, and looking at how they can handle those new market segments in new ways with entirely separate teams, new technology, new infrastructure, something that is built to be more agile and meet that market demand.